All right, cool. So, uh, on tap. Refresh this. My bad. Let's, yeah, okay. UK GDP shrinks more than expected. British economy sank 0.5% in July, the biggest decline so far this year, and reversing 0.5% growth in June. Figures came worse than forecasted, 0.2% to fall, with the services sector making the largest negative contribution due to strikes in the NHS. Considering the 3 months to July, the GDP increased by 0.2%. So on the quarter, they increased, but overall, on the year they declined. So mixed, but still some negative data, right? Still some negative data for the pound. So we shall see how things transpire there as we move forward. We shall see how things transpire as we move forward out of the UK. All right. It'll be interesting to see. It will be interesting to see. So the U.S. inflation to rise on oil, but core rate seen slowing. The annual inflation rate in the U.S. likely, right, this is the forecast to CPI information, likely accelerated for the second straight month to 3.6% in August from 3.2%, due to the base effect from last year and higher oil prices amid tight supplies, right? So compared to the previous month, the CPI is anticipated to rise by 0.6%, which would be the largest increase since June 2022, with gasoline prices at the pump jumping nearly 6%. On the other hand, core inflation, which excludes food and energy, is projected to slow for the 5th consecutive month. All right. So we'll see how that CPI data comes out as we move through the day. Okay. So that's that. Let me drop down. Oil prices rise, 10-month high on supply. Okay. Brent crude futures rose to 92.5 per barrel on Wednesday, with the highest in 10 months, driven by expectations that production cuts by major oil producers would continue to tighten the market in the coming months, as indicated by the latest market output reports. OPEC projected the global oil demand would increase by 2.25 million barrels per day in 2024, and anticipated a substantial deficit of 3.3 million barrels. All right. So, and they said that, right? Saudi Arabia and Russia both said that they were going to cut supply for the remainder of the year. So we know that there's some issues there. The EIA also expected a smaller deficit of 230,000 barrels in the next quarter, while the IEA stated that oil cuts or output cuts by Saudi Arabia and Russia through the end of the year would result in significant deficit through the fourth quarter of 2023. Meanwhile, an industry report showed that the U.S. crude inventories rose by 1.17 million barrels last week, with increase seen in gasoline distillate stockpiles. Right, so the U.S. is stockpiling some oil there. Okay. So we shall see. Again, right? We shall see. We know we have some constraints in oil, right? We know that that's there, and we know that in theory we'll continue to see some demand for oil moving forward. So let's continue to watch. All right, let's continue to watch there. Coming back. Euro trades at 107. My bad, everybody. 1 second. Euro was trading at 107, hovering around the weakest level in 3 months as investors remain cautious ahead of a highly anticipated ECB meeting scheduled for Thursday. As Reuters reported, indicating that the ECB anticipates inflation to remain above 3% next year, has fueled market expectations of an ECB rate hike this week. Yesterday we talked about they were split. Now we see a potential rate hike, even though the region's economic performance displayed signs of weakening. Present market pricing reflects an almost 75% likelihood that a central bank will raise rates by 25 basis points, a notable increase from approximately 40% on Monday and really 25% a week ago. Meanwhile, European Commission has adjusted its forecast for the euro area, projecting a growth of 0.8% in 2023 and a growth of 1.3% in the following year. Regarding inflation, the projected 2023 stands at 5.6%, slightly below the May forecast of 5.8%. However, the inflation forecast for 2024 has been marginally revised upward to 2.9 from 2.8. All right, so got some increasing bets there on the euro. So that's another piece that we'll have to continue to monitor to see how things transpire and see what happens. All right. So that is the euro. And Japan producer prices. Producer prices in Japan rose by 3.2% year on year in August, slowing from a downwardly revised 3.4% gain in July and posting the lowest reading since March 2021. The latest figure also marked the 8th consecutive month of slowdown in producer inflation amid easing global cost pressures. Prices moderated notably for beverages and food, iron and steel, business operating machinery, other manufacturing industry products, minerals. At the same time, costs continued to decline in lumber and wood products, chemicals and related products, electric power, gas, and water. On a monthly basis, producer prices edged up 0.3% in August, accelerating from 0.1% in July, right? So this PPI data is definitely important as we continue to have that conversation about Japan and the Japanese yen and the potential for them to start making shifts into the year, beginning of the first quarter, if they're able to reach a 2% inflation in a sustainable manner. So we'll continue to watch those inflation data and inflation numbers there. All right. That's it for that. Let's hop over to Forex Factory. And today, right, we already got the GDP data coming in later on today, 8:30. We got that CPI information for the United States. Definitely an important number for us to pay attention to, and will give us some additional insight on what the Fed may do next week. All right, so definitely important for us to pay attention to there. And then at 9:30 p.m. tonight, we got European employment change and unemployment rate, right? So important info there. We will continue to watch and monitor. Any questions from a fundamental perspective? Oh, okay. All right, cool deal. All right. Benny, good morning, bro.
Good morning, Ryan. Good morning, everybody. How are you, Ryan?
Doing well, man. Doing well. Interesting morning, but how about yourself?
Oh man, that's it. It is interesting. Out here running around already this morning. So lots of
Oh,
last minute stuff going on with the kids. So
already, man.
yep,
Already.
yep.
Cool deal. Anything fundamentally catch your eye, bro?
Just that, just keeping an eye on what's going on with the UK. That
Yeah.
GPD that came through. We posted in the Discord some notes, on that GDP numbers are always important, right? That's the health check on the economy.
Yep.
So we see some tightening, right? We got some contraction going on. And then other than that, I mean, today the United States CPI, which is expected to creep up overall because of what's going on with energy and oil, but
Yeah.
the core I think is expected to decline. So it's going to be interesting these rate decisions
They're
coming
going
up.
to be, man. They're going
Yeah.
to be.
So yeah, we got what the ECB tomorrow, right?
ECB tomorrow, then we got UK and the US next week.
Yeah, so those are going to be interesting, especially with that UK GDP data. It's going to be interesting to see the decisions that they make, and but because we just saw the report with they've got sticky wages still in the UK.
They do.
So it's going to be interesting to see the decisions they make, and then that Japan PPI data, it just continues to, like you say, follow the narrative of what's going on with the Bank of Japan, and we posted information on that yesterday in the Discord. So interesting times as we head into the fall and the weather starts to cool. So we'll see.
We shall see, man. We shall see. The setup for a fun year is on.
Indeed.
So let's get to it. Let's take a look at the dollar pairs. And what I want to do first is open up to you guys. If you guys have any pairs you want me to take a look at, drop those into the chat for me, and we'll take a look at those first, and then we'll dive into some others. So go ahead and take some time while we look at the dollar. Drop any pairs you got your eyes on in the chat for me. DXY. Let's come back to the daily. Boom. Here we are on the daily, right? This is that sub fib I had run into the upside. Price pushing back to the upside here for the dollar, right? Which we talked about. Didn't quite get into that zone, but did give us a retracement to test the AB boundary on the 4 hour, pressing back to the upside. So we'll see again if this level holds on the dollar, or if we get there and then we get a deeper retracement on the dollar before continuing to the upside. All right. So overall on the dollar, this is the look here. All right. This is the look here. Deep retracement, double bottom, 8-6 daily support. And then we got the push, long push to the upside. So we'll see what happens at this next level of resistance. All right, coming down to the 4. That's what it look like on the 4, right? 50%, and we're trying to make our way to the upside. So we'll continue to monitor to see what happens. CPI data shall be interesting to see where it pushes price here. Okay, see where it pushes price. So that's the 4. That's the DXY. Yeah, so that's where we sit on the DXY. Cool. Gold. Let's check her out. See. That's my bad, guys. My computer's getting stuck. All right, cool. So let's come back. Look at that. Played out just as we expected. This is on the 1 hour previous markup, right? Boom. AB boundary fell to the downside. You got a daily support there. So let's come back to the daily. And boom, right? So here we are in gold. That's our capital AB boundary there. and we're sitting still at some low prices. Whoops. Still sitting at some low prices, right? 618 retracement. Got to push out of the zone off the daily support. We had a previous level of daily support here. We're coming back and retesting. Okay, so let's see what happens here. See if this level serves as support again. We had a retest there. See if we get another retest here and see if it serves as a level of support for us to bounce and continue pressing higher on gold, or do we break and continue the move down? All right. Let's go down to the 4. Clean this up a little bit. And we'll run a fib off the high. Like so. Like so. Boom. All right. So here we are. On the 4 hour, we had this beautiful 80-20 scenario. Boom. Got a kick 618 retracement. And now we're pressing back down on the 4. So this is going to be key, right? Do we stay above these daily support levels, or do we break down and continue lower to get to the D extension, right? So that's the question. That's the question, right? Do we stay inside the AB boundary and get more range bound, press to the upside, or break down and hit the extension down here at 1877.27? Okay. So that's what it looked like on the 4, but that 80-20 to the upside played out beautifully. And now we're looking at a reversal and that push down. Okay. So we'll take those out. We'll take that out. And let's drive down to the 1.
Yeah, I'm short off the highs on this one.
Short off the highs on this?
Yeah.
I dig it. It makes sense off that 4 for sure. Boom. Actually, hold on. Excuse me. Want to double check this here. Here we go. Okay, cool. Yep. All right. Just wanted to make sure I was in the right spot. So coming down off the high, there we go. Right. Off of this one, right? There was that original one that we saw when we popped on the chart. That was at AB boundary. Boom, breakdown. We took out the A, right? So we flipped the fib and run the other way. So right now we're sitting at a B boundary, right? Shallow retracement. See if we press down into this 118, 127 zone or just extend to the D extension, right? So we'll watch these support levels and see how things transpire, and see how the data also moves price. Okay. There's a potential for this, but again, it'll be more, we'll see what happens at the support level, right? So see if we get a retracement first before the extension, right? And then we may just go ahead and break this level, retest it, and continue, right? So we'll watch that there. Those are 2 options here. All right, so that's gold there. But off that 4-hour time frame, right, we're pressing to the extension. Okay, so we know overall the trend is to the downside. And it's just a matter of, do we get a high price to get short, right? Or do we just continue to press down, making it to that 4-hour D extension and this next level of support at 1882.91. All right. Questions here. Questions on gold. Joy, what you looking at? Reese, what you guys looking at?
Was looking for a move to that sweet spot back down.
Okay. Seeing if you get a high price.
Yep.
I dig it. High price to get short too, Reese. Okay. I dig it. Yep. I definitely follow your thoughts on that. We shall see. Overall down, we'll see if we get a high price. If we're not in this, might give you an opportunity if we get up into the sweet spot zones. Something like this here. All right, if we push up into the zone, give us an opportunity to get short. All right, make our way to that 4-hour D extension. Boom. That's the 1-hour D extension there, right? 1877 was that 4-hour D extension. So a little further down to the downside, but that's what the potential could be if we get the high price. So we'll sit and wait. We'll wait and see what the market gives us. All right, see what the market gives us. But that's the potential if we get that high price there. Great. Questions on gold? No? Okay. All right, cool deal. Let's hop over to what do we have? Euro USD. Gotcha. Dollar pair. So let's take a look at dollar yen. Come back to the daily. That move is still playing out on the daily. Right. Got a nice deep retracement and we got our push. Right. This daily support level here. Boom. In line with that B boundary. We haven't come back. We came back double bottom there on it, and then we got the push to the upside. This retracement here, let me zoom in a bit. All right, we got a retracement early in the week, pop down, but we're pressing right back to the upside. Okay, pressing right back to the upside. So we'll continue watching this track, but looking for price to continue to the upside in the short term. Right, in the short term before we get a reversal and a potential larger move down to the downside as things continue to shift in Japan. But right now, I see this recovery happening in the yen. We'll see what happens at 148, 857 to see if we're able to break that to get to the D extension selfishly. Like I told you guys, I would love to get to 151. Don't know that we will, though. I don't know that the Bank of Japan will allow that to occur. So we'll watch and see what happens there. All right. Coming down to the 4. Here's our look on the 4. Let me double check something real quick. I believe that's right, but I want to just double check. Yeah. All right. Cool. So that one got taken out. We'll come to the next low. Boom. And there we are, right? That's where we stand on the 4-hour. We're in the 118, 127 zone. So it'll be interesting to see what happens here, right? We're closing this gap from Sunday to Monday, or from Sunday at the market open. So as we close the gap, we'll see if we push up to get to the 4-hour D extension at 148.551, right? And see how we get there, right? If there are strong impulsive moves, Bank of Japan may start talking again about intervention, right? If they're not, right, if it just trickles and trickles and trickles, I see the Bank of Japan allowing that to trickle, right? Because they're working their strategy, right? They're being patient and working their process. So, but we'll see what happens when we get back to this resistance level here if we are able to break that and continue pressing to the upside there. Okay.
Right.
Yes, ma'am.
When you do, I think I did a fib from because we haven't gotten that 382.
Uh-huh.
I did a fib on the 4-hour coming down, and it's at a 786, I think.
Okay. Yeah. Let me drop that in real quick. All right, coming back to the 4. So we ran a fib off the high on that gap down.
Yeah.
Got you. Yeah, definitely. So the interesting thing here is, and talked about it in the audio that was posted yesterday, but there's a back and forth happening with the Bank of Japan and the Japanese government, right? Bank of Japan is starting to have that conversation about the change. They stated potentially by the end of the year. Then the Japanese government said, hey, we want to make sure that we're collaborating on how we make this change to ensure that it's a sustainable move, right? So we're starting to see it back and forth happening internally. So I could potentially see, especially with the dollar, and if the Fed increases interest rates, I could see this take that A boundary out and push higher. So I still haven't changed to be bullish on the yen just yet. I am looking at some of these details and preparing to become, but I don't think that the Bank of Japan is there yet, and I don't think the market is there yet either. But definitely follow your rules here, especially get down to 1 hour time frame, because if we do get price to turn over, right, definitely take the opportunity. So I just say wait for additional confirmation on it as you're looking at this pushback to the upside and the close of that gap. It's back and forth, right? It's back and forth. The yen strength is coming, but the question is just, is it here yet? And that's what we have to that's why we're here, right? To decipher if it's here yet, right? So coming down to the one, you also got an 80-20 scenario as well, right? Appreciate you pointing that fib out, Donette. Running the fib off the high there, right? Similar scenario. Okay, similar scenario. Push down into that 118, 127 zone. Didn't get to that D extension, and there's that push back to the upside. So continue to monitor it, right? We'll continue to monitor it as we get deeper into the zone and see if we stay inside that AB boundary or if we take that AB boundary out, right? So we shall see what transpires here. Okay, but that's where we are. We do have an 80-20 on the 4 hour, and we do have an 80-20 on the 1 hour on this dollar yen. It's just a matter of, do we get the catalyst to move this back to the downside, or do we press to get to the D extension? Okay. Does that make sense, Donette? I know Reese is bullish on the yen right now too. So we'll see. We'll see what happens as we continue to move forward, as the data continues to come out. That's why that PPI data was important. And we'll see how dollar data comes out next week, and we'll continue to monitor the narrative to see if the data matches the narrative, and if we do start to see those bears come in and really start putting some capital to the downside. All right. Questions on the dollar yen? It's an interesting story. It really is. It really, really is.
Good morning.
Good morning.
This is Marshall. I have a question on this pair.
Yes, Marshall. Good morning.
My bias overall on this is bullish, and I wasn't sure if I was reading this correctly, because I'm missing these 80-20s. I think you guys are seeing these 80-20s on a bearish fib, right? On a short fib.
No,
is that
on
right?
this fib right here, AB boundary, right? So 80-20 is anything, any retracement less than a 382. There's your 382 retracement there. Price has not gotten there, right? So we got a shallow retracement. Price pushes into the 118, 127 zone, sometimes through the 118, 127 zone without getting to the D extension, right? So anywhere in this zone here without getting to that D extension. And that's where price is currently lingering. So if price turns around before getting to that D extension, right, this is what your trade setup looks like. There's your stop loss there, and then your opportunity to the downside here. Getting back to at least that 382 level, but could push deeper into the zone, getting to that 618, and potentially even if momentum is strong enough, taking out that A and continuing to the downside. All right, so we're looking at price doing one of two things here. All right, here. Either, right, if the 80-20 scenario does play out, right, we'll see price turn over and make its way to the downside, getting to that 382 level, which is right there. right? And then potentially continuing lower, okay? If momentum continues to be strong to the upside on the yen, then we see price push to the D extension there, breaking that daily resistance level like so, right? And then that will close the sequence on this highlighted fib here, and then we'll get a new fib to form once we get an AB boundary.
Okay, so that
sense?
fib is still valid because the D extension hasn't been broken.
That's correct.
Okay.
That's
Okay.
correct. The D extension has not been achieved yet, right? So remember, in smart trade, that's why it's color coded, right? And this will be highlighted until the matching D extension is achieved. So we got a 236 retracement. The matching D extension is a 1618 extension, right? Any of these retracement levels, 236, 382, 50%, 618, any of those in red, matching D extension is the 1618 extension, right? And those energy trampolines that we talk about in the training, okay? As it gets deeper, 786, matching D extension is the 127 level. 86 retracement, matching extension is the 118 level, right? And so that 80-20 comes in when you get that shallow retracement. Anything less than that 382, right? Anything less than that 382, boom, okay? You got price moving to the upside, like so. Let's do this. All right, price moving to the upside. And now, the 80-20 is a scenario where ultimately momentum is very strong. And price is moving in this scenario to the upside, right? Momentum is strong to the upside. So we get a retracement, it's just not a deep retracement. And price pushes into the 118, 127 zone, like so. All right. And we talk about it and we call it the 80-20 because in the data that we have and the testing that we've done, 78.6% of the time, when we see action like this, price not getting to that 382, price pushes into that 118, 127 zone, we get a retracement, at least back to that 382 level, right? And then sometimes potentially going deeper. Okay. Then the other, what's that, 22.4% of the time, price pushes to the D extension and continues to, and then we get a reset and a new AB boundary, right? So that's the sequence, right? So that's the 80-20 scenario to the upside. And that new AB boundary look like that once that D extension is achieved and the swing high is formed. Sequence starts all over again, right? And then conversely, the same thing to the downside. Okay, so looking at the chart, that's what you have here, right? Your AB boundary, right? Make that black. Your AB boundary, your retracement, less than a 382, less than a 382, right? So you got your retracement here. Price pushing into this 118, 127 zone, less than, right? Does not achieve that D extension. So if momentum shifts and the yen, right, continues to gain strength here, right, then we'll see this back at least to that 382 level, taking out that 236 level, pressing down at least there, potentially getting to the 618 level, boom, right? And then we'll see what happens from there if price takes out the A or if we get a reversal and a continuation. See that there, Marshall?
Yes, I do. Thank you. I
Okay.
wasn't looking at the fib that far back. That was my mistake.
Gotcha. Yep. So in running those fibs, and I'll do a video on this. Somebody asked about it, but mapping out your fibs, what we want to go ultimately want to go back to the lowest point and plow going forward, or if you take a fib off a higher time frame then you can start at the C point from that frame. But if you start at the lowest point and just map them all the way out, you'll get to that at some point. All right. So just go through and map them out all the way through. Right. So you see that A got taken out, price came down, and then, right. So map them all the way through. You see the A got taken out. So and run, okay. Continue to run it in the other direction until you get to where current price is. Boom. Right, push down. Right, A got taken out, so we ran them back to the upside. Right, so now we get to where price current.
Okay.
Cool.
Yes, thank you very much.
You're welcome. You're welcome. All right, hope that helps somebody else. Cool deal. Any other questions on the dollar yen? Yeah, Reese. It's the yen for sure. For sure, man. So we'll see what happens on that. All right. So cool. So that's the what we have euro dollar, pound dollar. Let's take a look at the SP 500, and then we'll take a look at those dollar. All right. X. I'm sorry, XPY. So interesting. So I'll come back to, we'll go to the daily. So on the daily, let me make sure this is the right fit here. I believe it is, but hold on 1 second, everybody. My bad, everybody. All right, so in that fib together. So that's our capital fib on the daily time frame here. So overall, this is what's going to be interesting, right? So this is our all-time high, right? 469.24. Okay. 469.24. SPX 500. Let me see. Am I looking at the wrong one? Look, it's relatively the same, but we'll go with XPX 500. I got some other information on here too, lower time frame. So we'll go with this one. Appreciate that. But same scenario, right? These orange lines are lower time frame frame levels. So still the same. So on this daily time frame, right? We have shallow retracement, price push into the 118, 127 zone, move down. Okay. So what's interesting is what continues to transpire here, right? All-time high 48.28. So we're in the 80-20 zone on the fib here. Okay. So want to see how things continue to move here, right? Do we get back to this high and or do we continue to move to the downside? Okay. hold on 1 second, everybody. My bad, everybody. Back that out. We'll walk through the start process here. So got an 80-20 on the daily time frame, okay, with a high here 46.15, right? That's the high point here, right in that 118 127 zone. Got price to push down, wasn't able to break out, we came back up. So we did create a lower high. Okay. So we got a downtrend forming like so. Right. So moving to the downside, the question is, do we get another push to the upside before we continue down? Okay. So moving down to the 4, we know where our high is on the, we know we're in the 80-20 zone on the daily. So we come back to the 4 to the upside. Okay. Here's our active fib. On the 4. We got a 382 push. Now what's going to happen, right? Do we continue our move to the upside, or is this a retracement to continue moving down? Right? That's the interesting question, waiting on data to help us understand, right? But we also have a 20 scenario here on the 4-hour, right? Zoom in on this. Oops, right? And we had shallow retracement, 118 breakdown. We got to that 382 level at TP1, and we got price turnover and push to the upside. Okay, so question, right? Pressing to the upside down, do we continue the move to the downside, or do we make a higher high here before coming back down? And what the Fed decides will give us the catalyst in one direction or the other here, right? Right now in the short, we're looking a bit range bound. We'll see if we come back to the support level for 44.2862, right? And then we'll see if we're able to break that on the 4-hour, right? If we stay above this 44.28, right, we could be pushing back to the top of the range. Okay, so we'll watch that. But that's the look on 4-hour, another 80-20 scenario. Okay. So coming down to 1 hour. So from the low again. Like so. Yep. Continue tracking. Boom. Right. Got to this high. Out. The A. Boom. Boom. Right. So we come to current, bam. 1 hour, right, at 382 retracement on the 4, deep retracement on the 1. Okay. Daily levels formed, daily levels held, came back to retest, and then we pushed to the upside. So that is going to inform you, right? Ultimately, that's what's going to happen, right? We got some highs here that we came back to retest and we broke down, and we got another push to the upside. Okay. So, but here we are also, Marshall, right? Scenario, shallow Price pushed into the 18,127 zone. And then we got the breakdown, right? So this was a beautiful move through August, right? So now we had a low and we're pushing long. So as we run the fibs off the low, right? And doing this, running the fibs off the low, right, or the C that formed in the scenario, the deepest point in between the AB boundary, looking for some confirmation, right, on this up ABCD wave. Okay, so boom, we got an 8-6 here, price pressing to the upside. Looking at these smaller waves, these sub fibs, where we also had an 8 play, right? 27 zone, push down, 618 retracement. We didn't get to that 786 level, right? So we got a 618 retracement on the sub fib, matching the extension as of right now is 4573, which puts us just shy of. So the sub fibs currently are pointing to more upside momentum here. If this fib plays out, if price stays inside that AB boundary, looking at price pushing another leg to the upside. Okay. So we'll track this to see. As of right now, the bias is short term, right? Short term long, and we'll see if we get a catalyst to turn that over, right? But data coming out for the dollar, right? CPI data is going to give us some insight. If that CPI data comes in hot, right, you can see this, you could see this tank, boom, right, and ultimately take out that A. If that happens, then we're flipping this fib and looking at price continue to move to the downside, and then potentially taking out that A on this capital fib as well, right? That CPI data comes in a little soft, could see a push, making our way to that sub fib D extension and some of these higher levels, right? So that's going to be the back and forth, especially leading up to the Fed meeting next week. That's going to be the back and forth that I think we see. Okay, so to be, do we get a double bottom at this 4-hour support level, right? This double bottom V-shaped action here, or do we break that level, continue pushing to the downside, right? So that's kind of how I'm seeing this. People are they're pricing in a potential pause and then another increase next month, right? That's kind of what the narrative has been. So we'll have to watch that to see if that's what plays out and to see what words Jerome Powell uses as he is giving his speech afterwards, right? Because we know that's always going to be important. So neutral to bullish short term here. And then just looking back on history, how the stock market has played some of these moves, they haven't really paid a ton of attention to the Fed, right? And now also, if you listen to the narrative and the rhetoric, the Fed has also started to change their narrative. Initially, well, in the middle, not initially, but in the middle, they were saying it's going to be a hard landing, right? We're going to have some pain, some struggle, and it's going to be tough, right? They've changed their narrative over the past month to month and a half. Now they're saying they don't see a recession, right? There's a very, very little chance of a recession, and they don't foresee. They're saying that because the economy is strong, because things are doing well, they think that recession is off the table. We'll see what happens. See if we do get somewhat of a softer landing, or if we really see a shift and we get a hard landing, but the Fed is giving their ideal scenario, right? Which is, and to comfort everyone so that people don't get afraid and fear and panic doesn't break out, and that doesn't tank the market, because that's also in the back of his mind, is not tanking the market to ensure that things continue to move, to ensure that banks are able to do what the banks need to do, right? So we shall see what transpires there, and we'll see how that narrative continues to play on. But that's what I'm looking at here. Excuse me. So CPI data is going to be interesting today, give us a shorter term view. And then obviously leading into next week, we'll see what happens with the Fed as well. But that's where I stand, excuse me, on the S&P 500 as of right now.
Hey, Ryan.
Sir.
Yeah, I didn't want to chime in because I was driving in a bad area breaking up, but that that XBS chart is giving you access to the S&P.
Yeah, that's what I thought.
It's just a difference in options features, everybody. That's all it is. So it doesn't matter.
Yeah,
you know,
that's what I thought.
From a technical chart, it doesn't matter.
Okay. Same data. The scale is a little different, but the data is the same. Appreciate that,
Right.
bro.
Mm-hmm.
Appreciate that. What are your thoughts on S&P 500?
The same, man. You gotta be data dependent, just like the Fed is. That's how the market trade.
Yeah.
Trade what you see at the time that you see it, and keep it moving from there.
Yeah. So we'll see, right? We'll see what happens here. CPI data at 8:30. That'll be our first data point. That'll give us some insight. Reese, what you think? You thinking short here and long on the dollar? Let's see. Bearish, yep. Need a high price. I dig it. Yep. So we'll see, right? And we'll continue to monitor it, right? We know we got the trend line off the high here, the trend line break. Right? Trend line break came, boom. You got to move. So now, do we continue that move to the upside? We got to the outer trend line, broke back below. So we'll see if we continue moving higher or if we go ahead and break down. So that's where we sit. Let's go down to the 30-minute. I know Reese is done. Let's see what we get. That fit taken out from the 5. That one got taken out as well. Cool. So this is where we sit on the 30-minute scenario. 618 retracement. Boom. Retracement 118, 127 zone. Right. The other characteristic, Marshall, right? When we get into when we get into that 118, 127 zone, the other thing that we see, right, is consolidation, aside in price, right? So price will start chopping, moving sideways, and then we'll see a breakdown, right? So that here, tracement didn't get to a 382 level, pushing to the 118, 127 zone. We got consolidation. We got a breakdown. 382 achieved, 618 achieved. So TP1, TP2 achieved, and then we got a bounce, right? So that's where we are on that reset. He got a fib running off the high on the 30. Boom. Here we go again, right? This time we didn't fully push. We didn't push into that 118, 127 zone, but shallow retracement, price 4-hour support here, and then you got a deeper retracement. All right. So boom. Just shy of that 618 level. So we'll see what transpires here. We'll see how the market decides to move. We'll see how the market decides to move. We'll do. Missed the first entry at you're talking about right here last week on the 7th. No, you're talking about high at the resistance. Got you up here. Just shot at 618. I dig it. Yeah, we'll see if we get another pullback, man. We'll see, right? I'm also looking to see if we push down to retest the support level and get a potentially double bottom here. All right. And then move back to the top side. So we shall see what transpires there. Okay, so that is the S&P 500.
Right?
Yes, ma'am.
Would you mind going back to that 30-minute and flip from the low? Because I think it's sitting at 61.
Yeah, we got your 618 push right here. All right, price came up, came back down. So right now, price at the 50% level. All right, and we'll see if we get another move there. Shall see. Cool. All right, let's take a look at the euro dollar. Boom. So it's interesting. On a weekly time frame perspective, we got an 80-20 scenario. Boom. Weekly support there. But shallow retracement, less than a 382, pushing to the 118, 127 zone. Okay. Now we're coming back down to the support level. What happens here? Do we get a bounce at the support level? Or do we break that and continue pressing lower, right? ECB this week, dollar next week, that'll give us the insight. But been a strong move to the downside. Strong move to the downside. So the other question is, do we get something like a head and shoulders pattern, right? Test that support level. Then get a push to the upside. Create that right shoulder. And then come down. Right? Do we get something like that? Do we get something like that? Right. So we'll watch and see how things transpire here with the dollar. Right. So that's the weekly time frame. Coming down to the daily. Okay. There we go. On the daily, we've already got a 618 retracement. Couldn't break out. Came back previous level of daily support here. We're retesting that level now. Right? Retesting that level now. So the question is, do we stay below this? Stay below, right? Or do we see that head and shoulders type action start to form? Right? Maybe a push higher, but boom. Do we get action like that? Right? The data is going to lead us. The data is going to lead us. CPI rate statement for the euro, right? Does that give us a catalyst to push down and push back up? Okay, we'll see. Coming down to the 4. Boom. And we're in an interesting situation on fib out. This is our capital fib on the 4-hour time frame. Pushing down, right? So we're still at a 618 retracement level. We got this shy of that 786 zone. This is that daily level that we broke. Do we continue to press down, right? Give us a 786 retracement. That'll put the maximum extension at 111, 441, right? Do we get that? We'll see. We'll see, right? Or do we, again, stay range bound? So that's what I'm looking at here. we deep retracement on the 4. Do we question on the 4-hour time frame? Okay. As we move down lower to the 1, we're hovering at the B boundary to the daily level. Here is that weekly support level, right? So if we get a shallow retracement and price to push down into this weekly support, that'll give us an 80-20 scenario on this 1-hour time frame, which will lead to that retracement, at least in the short term, on the euro dollar, if this weekly level holds. Okay, so in the short term, I'm looking for this move here, a press down, then give us a move back to the upside, right? And then look to see a reversal after we get a high price to move back down to the downside. So we'll see what the data holds for us, but that's the potential on this euro dollar, potential 80-20 if we get a push, weekly support holds. Okay, questions on the euro dollar?
What I did, I went back to the daily and I did a fib from since we know that on a weekly it's coming to the downside.
Like that?
So we get a new fib that's gonna form there. Take the high price. The price pushes up.
Mm.
Or pushes down, I don't know, but
I dig it. That move there, right? And if that occurs, if this retracement occurs, right, that plays into a potential 80-20 scenario on the sub-fib, but also plays into this head and shoulders pattern as well, if that support level holds, right? Or if it presses deeper, right? If it fully pushes into the 127 zone and takes out that low, right, then it gives us the King's Crown pattern. Right, so it kind of plays into that same narrative of either a right shoulder or a right tip, potentially forming the high price, right? And then just run that fib off of the high if we get that like that. Boom. Right, or even like, right, and that retracement, 618 retracement zone. So, yep, I dig you there. I dig it there, right? So we'll see if we get this retracement to occur, right? That'll play right into the idea. It'll play right into the idea. Did you take this fib down to the lower time frames?
no.
No? Okay. Okay.
Good idea though. Thanks for that.
Yeah. Right. Just to see how everything fits into that idea. Right. So there's your fib on the lower time. Right. So if you run your fibs off the high here, I believe you come to something similar. Boom. Right. So that's a smaller wave within that larger one. But there it is. Right. So now if you come down to your 1 and look at it from this perspective, right, almost in alignment with that. 127 zone is a little lower, but still giving the same look, same idea. Push down and then reversal for that 80-20 scenario. Yep. Cool deal. Any other thoughts, questions on the euro dollar? Nope. All right. Cool. And then we had pound dollar. Pound dollar. Similar on the week 82 already, right? And we pressed into the 118 and 127 zone, right? So coming back down, coming back to test this weekly support level now, right? Coming here to the daily, we just missed the 382 on the daily. Okay, there's a larger fib coming down here off the highs. I won't draw, but just know this push to the upside, pushed into high price to get short. Yes, sir. Pushed into the 618 zone off of that larger fib that I had earlier. Right. So keep that in the back of your mind. But we got an 80-20 scenario here. Right? Running to the upside, price upside did not get to the D extension. Okay, so we're coming into some key levels of support, daily and weekly support levels here. Right. So do we push down, then a retracement, and then a continuation, right? We know things are coming in a little more dovish for the pound, right? But they still got super high inflation, right? And they got sticky wage data, even though unemployment is creeping up, right? So got some back and forth information there that could give us, right, some indecisive action. But this move inside, right? So we'll see what happens when we get to this daily and weekly support level here. Okay, coming down to the 4. There's your 80-20 scenario on the 4. Got to our 382. Shallow zone, just tap that 118 level. Turned over. Boom. TP. Okay. TP1 achieved. Off that move, that's 600 pips to the downside to TP1. Okay. So now we're looking to see, again, what happens in this of daily and weekly support, right? How does price move once it gets there? Okay. Coming down to the 1, we zoom out. AB by 618 retracement, matching extension is in line with that daily support level. So we got some confluence, right? Along with the support levels, we also got a D extension there. So do we get a reversal at this daily support level, or do we get price to push lower into the 118, 127 zone and then give us a high price? So waiting on this one, waiting for price to push down to the downside to get to that support level, hit the D extension on the 1 hour time frame. And then we'll see, right, if these levels hold, if we get a reversal, or if we get a shallow retracement and a push into the 118, 127 zone, then do we get a catalyst to move that back to the upside, i.e. rate statement next week? We shall see. We shall see. But we're moving into key levels. So historically, right, these key levels, daily, weekly, monthly, are important. They're important. So we'll watch them to see if we start to get some reversals in these zones. Okay, we'll watch and see what happens. But that's my look on the pound dollar, right? Waiting for price to get low and then see if we get a reversal. Okay. Questions on the pound dollar? But we're definitely like a high price to get short. We're definitely like that. All right. Nope. No questions. All right. Benny, you got anything before we wrap it up, bro?
No, sir. Great session.
Appreciate you, man. All right, good people. That's a wrap. That's a wrap, right? Continue to be patient. Continue to allow price to move into your sweet spots. Continue to allow price to give you the confirmation that you need based on your trading plan before you enter the trade, regardless of the time frame you're on, regardless of any of that. Allow price to meet your rules before you take the trade. Be patient, be patient, be patient. Reset it in the chat, in the Discord. Patience pays, right? Benny says it all the time. Patience pays, right? So allow price to move into your zone and show you that it's ready to make the move that you're looking forward to make. All right. So find your 1% today, good people. We'll be back at it tomorrow morning, 6:30 a.m. Eastern Standard Time with my awesome partner, Mr. Benny Allen. Until then, right? Let's continue to drop the thoughts in the Discord, continue to engage, continue to be patient. We'll see you in the morning. Peace.
Thank you.